Hey everyone, welcome back to another edition of the weekly market watch list where we break down key insights for traders and investors heading into the week. I'm glad you're here. Before we dive in, make sure you hit that subscribe button so you don't miss a single update. If you find value in these breakdowns, give the video a like and drop a comment below. Let me know which stocks you're watching or any setups you've got your eye on this week. Today's edition will cover key economic events and data releases on the calendar, alongside major earnings reports that could move the market and, of course, a hand-picked watch list of 6 names I'm tracking this week with breakdowns on price levels, catalysts, and setups I'm eyeing. Whether you're swing trading, day trading, or building a long-term portfolio, there's something in here for you. All right, let's get into it. Let's kick things off with the economic calendar. Here are the key U.S. events to keep on your radar this week. On Monday, we get the latest reading on leading economic indicators for June. Economists are expecting a mild pullback of 0.2%, continuing the softening trend we've seen over the past year. Tuesday brings an early morning event with Fed Chair Jerome Powell delivering opening remarks at a banking conference. While it's not a full policy speech, markets will still be listening closely for any subtle clues about interest rate expectations or financial sector regulation. Wednesday gives us a look into the housing market with existing home sales for June. The forecast sits at 4 million units, a slight drop from May, suggesting continued pressure from high mortgage rates. Then we hit a heavy Thursday lineup. Jobless claims could move markets, with estimates rising to 229,000, up slightly from last week. Flash PMI data from S&P will offer a real-time glimpse at business activity. Both the services and manufacturing PMIs are expected to remain above 50%, signaling expansion but at a slightly slower pace. And we'll also get new home sales, where analysts see a jump to 650,000 units, potentially a sign of resilience despite affordability concerns. Finally, on Friday, we'll be watching durable goods orders, expected to plunge minus 11% in June after a massive 16.4% jump in May. That's largely due to the volatile transportation sector. But the core reading, which excludes those big ticket items, is projected to rise a modest 0.5%. Altogether, it's a data-heavy week. And with the Fed quiet period approaching, these numbers will likely drive rate expectations and sector rotations. This week's earnings calendar is absolutely loaded, and it's going to be a key driver of volatility and sentiment. On Monday, we kick things off with Verizon VZ. Not necessarily a mover for the whole market, but it sets the tone for telecoms. Tuesday heats up with names like Coca-Cola KO giving us a pulse check on consumer staples, and SAP offering insight into global software demand. But all eyes will be on Texas Instruments TXN, a crucial early read on the semiconductor space. We also hear from Lockheed Martin LMT giving clarity on defense budgets and spending. Wednesday is the big one. We've got Alphabet, Google, and Tesla reporting after the bell, 2 of the most closely watched names in the market. With a combined market cap over $3 trillion, their numbers and guidance could set the tone for the rest of tech earnings. Also reporting are IBM, T-Mobile, TMUS, and ServiceNow now. So we're covering everything from legacy tech to SaaS to wireless infrastructure. On Thursday, we'll hear from Intel ENTC, and expectations are low. A beat here could ignite the AI chip narrative again, while a miss could weigh on semis. Blackstone BX provides a read on private markets, and Honeywell Han gives us an update on industrials and automation. We'll also be watching Valero Vlo to see how refining margins and energy demand are trending. Finally, Friday rounds out the week with HCA Healthcare HCA and Charter CHTR plus Phillips 66 PSX for energy bulls. These names may not move the index, but they can drive sector rotation. So buckle up. Earnings will dominate headlines this week, and several of these names could trigger big moves in both directions, depending on surprises and forward guidance. Now that we've covered the macro drivers and earnings lineup, let's introduce this week's watch list. 6 names I'm tracking closely for trade setups, momentum, and potential catalysts. We'll start with the big picture by breaking down SPY, representing the S&P 500, and QQQ covering the NASDAQ 100. These give us a read on large cap strength and tech momentum. We'll also look at IWM, the Russell 2000 ETF, which tells us how small caps are holding up, especially with rate and recession chatter still floating around. On the individual stock side, we're checking in on Disney DIS to see how it's trading into earnings season and restructuring headlines. CRISPR Therapeutics CRSP is on watch again. This biotech name has been moving on gene editing news and broader risk sentiment. And rounding it out is Unity Software, ticker U, a former high flyer trying to reclaim momentum. We'll look at the technical setup and see if bulls are stepping back in. Let's dive in, starting with the broader market through SPY. Let's kick things off with SPY, the S&P 500 ETF, our main read on large cap market momentum. SPY closed last week at 627.58, pulling back slightly after printing new all-time highs earlier in the week. The trend is still bullish, but we're seeing some signs of consolidation just below the 630 resistance zone. Weekly support sits around 618 to 620, which lines up with the recent breakout area from early July. If buyers can hold that level, the bullish structure stays intact. This week, price action will likely be driven by Fed Chair Powell's comments on Tuesday, initial jobless claims and PMI data on Thursday, and of course, major earnings from Alphabet and Tesla on Wednesday, with volatility control funds nearing their buying limit and the VIX still hovering near cycle lows. We could see a bit more chop, or even a sharp rotation if earnings or macro data disappoint. From a setup perspective, I'm watching 2 things: continuation breakout above 632 with volume that could open the door to a move towards 640, or a failure to hold 618 could trigger a move back toward the 10-day EMA at around 604. 0.5 thousand, or even a retest of the 590 seconds, which is the neckline of previous all-time highs from February. Overall, SPY and the general market is strong, but we're heading into a week full of landmines. Be nimble. And don't forget that headlines will likely dictate direction more than technicals over the next few days. Next up is QQQ, which tracks the NASDAQ 100. And with all the big tech earnings coming this week, this ETF could see some serious movement. QQQ closed last week at 561.26, just a few points off its all-time high. The uptrend remains very much intact, but just like SPY, we're seeing a bit of hesitation heading into earnings. Our resistance sits right around 565, which is slightly above the recent high from last Wednesday. That's your short-term breakout level. On the downside, 550 is the first major support, followed by a stronger demand zone between 500 and 36 and 538. That's 50% of the last breakout candle initiated in early July. This week's action will likely be dictated by earnings from Alphabet, Google, and Tesla TSLA on Wednesday after the bell, along with reports from Texas Instruments, ServiceNow, and T-Mobile. Tech has been leading the charge, but now we're at the point where expectations are high again, and even small disappointments can lead to sharp pullbacks. From a trade perspective, I'm watching 2 key setups: a clean break and hold above 565 with volume that could trigger a squeeze higher into the 575 to 580 range. On the flip side, if QQQ fails to hold 550, especially post-earnings, we could see a retest of the 538 zone or even a pullback to the rising 21-day EMA. Bottom line, QQQ momentum is coiled and ready. Just be ready for volatility. This isn't the week to over-leverage or ignore risk. Big tech earnings can shift sentiment in a heartbeat. Now let's take a look at IWM, which tracks the Russell 2000, our best proxy for small caps, rate sensitivity, and overall market breadth. IWM closed the week around 222.23, continuing to trade in this tight range between 215 and 226. It's been stuck in this area for most of July, which is not a surprise given that in the past it established a 2-year range between 198 and 230 while market made new all-time highs. The nearest support is sitting near 215, which also lines up with a 10-day EMA. If that level breaks, we could see a quick move down to 208, where demand stepped in last month. On the upside, we're still watching 224 through 230 as key resistance. That's where sellers consistently show up and where bulls need to clear with conviction. From a macro lens, IWM tends to react more sharply to jobless claims and PMI data on Thursday and Powell's speech Tuesday morning, especially if there are any hints on future rate moves. Remember, small caps have underperformed large caps year to date, but that also means they're primed for rotation if risk appetite picks up. My focus here is twofold. First, if we get a break and hold above 224, that opens the door to a larger breakout move toward the 230 and then 237. Potentially supported by strong earnings or dovish policy signals. But if 218 breaks with volume, we could see a quick fade back toward 215 or even the 60-day moving average around 208. Right now, IWM is all about patience. When it picks a direction, I want to be ready to follow the momentum but not jump the gun before confirmation. Let's turn our attention to Disney ticker symbol DIS, which continues to quietly grind higher and is now approaching a key breakout level. Disney closed last week at 121.42, holding near the upper end of a tight consolidation range between 118 and 124. That 124 to 127 area has acted as a strong resistance zone, capping price for several years. Meanwhile, price attempts to build a solid support between 108 and 116, aligning with the June breakout pivot and rising 30-day EMA. Technically, we're looking at a possible bull flag pattern, with price tightening just beneath a breakout level. These setups often resolve with explosive moves, especially when backed by a catalyst. And Disney definitely has catalysts on deck. First, there's the ongoing corporate restructuring narrative, from ESPN spin-off speculation to renewed focus on streaming profitability. Second, theme park strength is showing up again thanks to strong summer travel numbers. And third, earnings are just around the corner in early August, which means traders could start positioning now. So here's the plan. I have a very close look at the weekly chart. Price has ranged between 77 to 124 since April of 2022. This is the fifth time in that period that prices climbs and attempts to break the supply zone. A break and hold above 124, especially with volume behind it, could trigger a run toward 130, maybe even a breakout into a new range between 136 and 144. On the flip side, if we lose 118% support, that opens the door for a fade down into the 115, 116 area, where the next layer of demand likely sits. Overall, Disney is holding strong at 52-week highs. It's not moving fast, but it's definitely building interest. I'll be watching closely for confirmation on either side. When it comes to options contracts, I am specifically eyeing the September 19th 140 calls or the 105 puts, which would fill in the weekly gap. A bit further out, we have January 16th 160 calls. Now let's move on to CRISPR Therapeutics, ticker CRSP, a high beta biotech name that's been on investors' radar for its Gene editing breakthroughs and volatility. CRSP recently traded around the 65 to 67 range after breaking out of the $43 to $47 range earlier in July. Currently 58 to 60 is a well-defined support zone where buyers stepped in strongly. On the upside, the 70 to 74 area acts as resistance, a zone that capped the stock multiple times over the past few years. Look back at the range starting in 2021. Technically, it's been on a month-long run since its bull flag breakout from 43 to 47. It's the kind of setup where continuation or breakdown can lead to a fast and emotionally driven move. On the fundamental front, CRISPR remains in the spotlight. Potential clinical trial updates or FDA announcements could act as sharp catalysts. Gene editing headlines, whether through patent news or strategic partnerships, often move the stock hard and fast. And broader biotech sentiment, it had a significant influx in interest, especially as small caps and innovation stocks regain favor. Here's how I'd play it this week. A break above 66% with volume could trigger a run toward the $70 mark. If momentum continues in its favor, we can possibly test a range breakout of 75. Conversely, a failure near resistance and a drop below 63, especially with bad biotech sentiment, could send CRSP retesting a 58 to 55 range quickly, and maybe down toward 50. In sum, CRSP is poised on a classic volatility ignition point. Biotech can surprise, so let price lead and be ready for directional follow-through. As for options potential, I am eyeing a few contracts. On the upside, $70 and $80 weekly calls. On the downside, $60 and $55 weekly puts. Be aware that options chain for this specific name isn't the most favorable. Liquidity only tends to show up when it's having a significant move. It'd be one with a lot of risk as the best potential is entering early. Now let's dive into Unity Software, ticker symbol U, a tech name known for its real-time 3D development engine that's currently sitting at a key technical level after showing signs of renewed momentum. Unity closed last week at 36.75, positioning itself near the midpoint of the range it's been stuck in for the past 3 years. That $38 to $39 area continues to act as heavy resistance, while support remains clearly defined between 32 and 34. That area acted as resistance between November 2024 and the breakout it had this July. From a technical standpoint, last week, Unity cleared the 120 exponential moving average, and volume has been gradually increasing, suggesting that a directional move could be on deck. If price action can clear the 38 with volume to back it up, the next zone to watch is the $45 to $47 range, where Unity last encountered meaningful selling pressure towards the end of last year. But first, we aim for a test and break of 40. But if the stock gets rejected again at resistance and falls below 34, we could see a slide toward the 32 to 33 area where demand last stepped in. On the fundamental side, Unity recently received a bullish analyst upgrade from Jefferies, which sparked a short-term rally and put a spotlight back on the name. Beyond that, the company is scheduled to report second quarter earnings on August 6th, which could serve as a key catalyst, particularly with renewed investor interest in AI-driven advertising and interactive content platforms. In short, Unity is setting up for a high conviction move. The chart is tightening, sentiment is building, and earnings are just around the corner. This is one to keep on watch, but as always, wait for confirmation and let price lead the way. That wraps up this week's market watch list. We covered the major economic events, key earnings to watch, and 6 names that I'll be tracking closely, from broad market ETFs like SPY, QQ, and IWM, to individual setups in Disney, CRISPR Therapeutics, and Unity Software. As always, stay focused, stay flexible, and let the market come to you Whether you're day trading or swing trading, preparation and patience are key. If you found this breakdown helpful, make sure to like the video, drop a comment below with the tickers you're watching, and subscribe for weekly updates and trade planning content. The QR code and link in description can take you right into our community hub, which is intended to be a library and space for everyone to grow together without having to pay for knowledge. Thanks for tuning in, and I'll see you in the next one.